Good evening, everyone, and welcome to this evening's market wrap for Thursday, June the 26th. There is so much to talk about today. Here are some of the big picture things that we'll be discussing. The indexes following through, eyelashes away from all-time highs, stocks continuing to follow through, set up, breakout, move well, and the stocks that are in the portfolio, those ones moving very well as well. One of the big challenges in a market like this, if you could imagine a challenge, is that there could actually be too much of a good thing. Well, when they say feast or famine, and you have the feast, the temptation is to be like the guy at the buffet line that you have your plate and you're just stacking up everything that you possibly see, and you get a mountain of food on your plate this high, and you're trying to walk back to your plate, and then all of a sudden it falls on the floor. Well, we don't want to be that person, so we'll walk through how to manage when there's a lot of opportunities. So let's start with the major indexes and we'll walk through that first. So here we have the S&P 500, NASDAQ, Russell 2000, New York Stock Exchange, and the Dow. You can see that we're still in a green condition. We flipped to a green condition earlier this week uh, with the market, with everything firing on all cylinders here. But the main thing with these each of these indexes, you could see that each one of them pushed higher, made higher highs on their daily time frames, closed at the top of their trading ranges, and all of them are in uptrends. I'll also add that each one of them is still relatively close to their key moving averages. Even the S&P 500, which has a little bit of airtime above its 5 EMA, all of them are still fairly close still to their 5 and 10 EMAs. Um, Many of them, the 90 and the Russell 2000, even touching those key moving averages. So that's something that tells me that this move that we're seeing is still in the pretty early stages. And the fact that we keep on getting more setups and fresh breakouts, and those setups are working, it's I think that we're in the early innings. Um, let's take a look at the weekly charts before we get too far ahead of ourselves. Here's a look at the weekly charts of the major indexes. Once again, we have the S&P 500, NASDAQ, Russell 2000, New York Stock Exchange, and Dow, all of them near the top of their trading ranges for the week, all of them in uptrends, no big surprises there. Also for the monthly timeframes, if you recall earlier in the week, even over the last couple of weeks. So we've talked about uh, the the relative choppiness in the indexes. Not as much last week, but more so the 3 4 weeks ago. And even then, the monthly charts were still near their highs, and it's really been a case of, well, if you look at the monthly chart, could you really spot the choppiness from the other indexes? And that's something that I think that can really help give us a great mindset, help us grounded, and to understand that the bigger picture matters. And just because we could encounter a little bit of short-term noise, it doesn't necessarily mean that the market is getting ready to roll over. That's something that's helped me when it comes to general market analysis, something that's helped in analyzing and how I'm going to manage my open positions as well. So, from what we're seeing here on the major indexes, we're still in green conditions. Unfortunately, we're still having that same problem with the new highs versus new lows indicator. It's still reflecting the same data that was back on Monday. I don't know why we have yesterday's numbers now. Yesterday was 63 new highs, versus 23 new lows on the Nasdaq. A little bit of a consolidation in those numbers. That's okay. Not nothing terrible there. On the NYSE, we had 45 stocks making new highs and 14 stocks making new lows. Same deal. That's not uh, a major issue. The ratio is still intact. Far more new highs than new lows, and as the indexes push higher, I wouldn't be surprised if we had a significant number of new highs today. Uh, we'll hopefully have those numbers for you tomorrow. But overall, from this picture that we're getting from the indexes, we are in a green condition. Now let's turn our attention over to stocks that are setting up and stocks that have made the action list and how those ones have behaved. So I'd like to start over with Deep View. On Deep View, I've made a new list, and it's given me the ability uh, to partition the list. So I have the archived uh, action list from last week. You can see last week there weren't too many that made the list. Only three last week, and then it was this week where so many names started to come onto the list, break out, work, and so you could right there. That's a very clear sign of how quickly the market can evolve and move and start to produce some pretty hefty gains. I'll click. We'll sort by percent change current week to start things off. And you can see how well stocks have moved on the week. For all the names that are on the action list this week are up on the week. The with Uber being the biggest at over 11%, all the way down to TOST up 0.3%. Last week, Dash was the winner from the action list with a 8.7% win. The other ones, FTAI and DOL, both down still so far. And so this also highlights something else. All of the names that I've placed on the action list the last 2 weeks, I've set alerts on everything. Why set alerts on these names? The first reason was because either support wasn't clearly established, but the entry point was, or the entry point was clearly established, but the support level wasn't. Well, when I'm going to place a working order for any name that I'm interested in, I want clear multi-time frame levels of confluence on both the entry point as well as the stop loss. We have to go back to Spotify. That was one that I placed the working order for. So here's Spotify. I bring up Spotify real quick since we're now talking about this. So you see how Spotify on this breakout, it had both uh, multi time frame confluence for the breakout. Right, price was getting above these highs going back to February, consolidated just below them, and then started to break out. And the true breakout was right here. That's multi time frame, daily, weekly, monthlies, all getting above that same level. Love that. Then for the stop loss, when I'm looking at the stop, it has the weekly low plus it. I believe at the time. Let's see. It actually did it line up well with the monthly low. It might have been close to the monthly low, 656. Uh, no, not quite the monthly low, but it did have the weekly low. But it also had all the key moving averages right around it. It made sense on the daily. It also made sense very well with how price developed on the 30-minute time frame too. Whenever I'm taking a trade, I like to look at the time frame above and the time frame below to get the bigger picture as well as the granular picture. It helps me to be um, more specific with my entry and my stop. So Spotify was the last time that I saw all of it working together. Clearly, we don't need all of it to work together all the time in order to place great trades, because when it's not, we could place an alert and then we could wait to see how price breaks out. And is there volume on the breakout? Does it break out cleanly? All things like that. And then we can make an assessment of, well, should we be taking these trades or not? And many of the names that you've seen so far have done extremely, extremely well. Here's a look at the actual action list. And on the action list, we've had 8 stocks that are winners from our alert price, and 5 that have turned out to be losses so far. So everything that's triggered is what I'm counting. The ones that are active alerts right now, and we'll go through these. Those ones are not included yet because they're just below the alert level, and well, yeah, you get the idea. So far, Cyber, KD, and RBRK triggered alerts. Those ones are winners. QFIN, also a winner. Dash, a winner. IBIT, Uber, and Lyft, all winners after triggering the alerts. Then we had TOST, HRTG, IONQ, and DUOL, FTAI. Those ones have been duds. And none of those names, right? The ones down here with none of these in gray were traded. The only ones that I actually took were these ones up here. So I'm grateful. Right? You never know what's going to happen after you buy, but part of the way that I selected these names is because of how they broke out. Did they break out cleanly? Uh, Not all of them did. Some of them gapped up. Some of them gapped up on heavy volume. I waited for the pullback, bought the pullback, and then so far, so good with them. So there's a little bit of finesse required when we're trading alerts. So when we get to the open trades, we'll go a little bit deeper into that. This is more of a higher level overview of what uh, stocks on the action list have done post breakout. And I find it to be so valuable because the ones that make the action list are the ones that I'm considering to be the best of the best. The ones that, if they break out well, are the ones that I'm willing to put my money into. So they've got to be best of the best. They've got to fit my model book criteria. My model book criteria is available to everybody. It's here in this tab, Setups Model Book, and you could go through and see the definitions, all the must-haves, all the things that take it from good to great, and you could take a look at samples of each of the setups. Just click those links and you'll get it. But any stock that makes the action list closely resembles something that's on this Setups Model Book tab. So let's go through some of the stocks that are on the action list right now for tomorrow, and then we'll get into the open trades. So first off, few names that were on it coming into today that are still there. Nothing that was on the action list coming into today actually triggered. Right? that hasn't happened in a couple of days. Today was a relatively quiet day for the action list, which is interesting, and they actually firmed up a little bit. So here is some of those names. Take a look at them on the daily time frame. So the first one is SE. SE was consolidating right below $160.60. Today it had another inside day. So it's had double inside days, and it's doing those double inside days right around resistance. No, not just 160, but resistance going back to June the 16th, resistance right below the anchored VWAP from earnings, and it's consolidating very tightly around this key moving average coil. With the 5 EMA, the 10 EMA, the 21 EMA, you see how they're all bunched up right around the recent lows. I call that a moving average coil when it's bunched up like that. So what this does is it gives us a very clear entry and stop loss, a very tight risk on this trade. Uh, Between the entry and the stop, I only need to risk 3.5% if this breaks out and I decide to take it. So uh, that's what I like about SE. Something else that I like about it too is the stochastics that are turned up ahead of the breakout. It's just one of those things that I've observed over time that uh, the stocks that I trade tend to have that, or the stocks that do well that I trade tend to have something that looks like that ahead of the breakout. It doesn't guarantee anything, but it's good to see. Also, the relative strength line being near highs, and SE still being one of the top competitors in its industry group. All those things are great. Then TKO. TKO broke out of a VCP last week, last Wednesday. The pivot was down here at about 170.10 when price broke out. Decent volume on the breakout. Let's shift this over now. Yeah, you can see that volume was about double daily average volume. And then the next day, another volume spike just below the high, and price has been moving sideways since. This could actually count as an additional contraction. I would look at it as an add-on at this point. Uh, if in from lower, I would treat this as an add-on. I wouldn't look to get aggressive with an entry here as far as size, since down here was the better entry. If you bought down at 170, that's the better entry. The reason why isn't just because you got it in a lower price, but because you were closer to the moving averaging. The moving averages all coiled up down here, much closer to the danger zone. Support being around 163 and a half, or even if you would have used $160.90, that would have been great too. Right now, when price is up here, we're more dependent on momentum because you see how the moving averages are now fanned out. There's some distance between the 5, the 10, and the 21 EMA. So that leaves price open to being able to push out and then pull back. That happens a little bit more when we're in this zone. And it takes a little bit more time to see, are we right or wrong? And if you're comfortable sitting with that, then great. But that might be something that you've got to deal with. One of the reasons why I like to set alerts for these kinds of trades. Let's talk about Lyft. Lyft started with a gap up on Monday. This one I didn't trade because my alert was set way down here at about $15. It gapped above the alert, didn't look back, and I didn't see a clear low risk way to get in. So I let it go. What happens? Price consolidates now, starts to drift sideways for a few days here, and now we've got another way to enter. I'm looking at an alert at $16.13, just above Tuesday's high, also the weekly high, with a stop below uh, or right at 1540, which is just below these 3 days worth of lows. And now we've got the moving averages all catching up to those lows. So if price does break out, those moving averages will support even more and create more of a support level around $15.40. So this is a setup that I I like quite a bit. So we'll need to see if it triggers, how it triggers. All those things matter. If volume is light, if the market is wonky, those are the kinds of things that would give me pause. Here's Airbnb. Now, call me crazy, but this setup actually reminds me quite a bit of how coin looked. Right? So let's actually bring up coin. Completely different industries, completely different stocks, but just the way that this had a deep correction, then rallied, then went flat for a while, low volume or high volume, a bet when it finally got back above the key moving averages of 50, the 200-day moving average. So look at that volume, goes sideways, and then whammo, it's way up to the stars. Take a look now at Airbnb. This one, deep correction, rally, volume coming in, not quite the heaviness of the volume, but we do have quite a number of days where volume spiked well above average. Some days where it's double the average daily volume. These two here look like volumes up probably about 75% on the day. And then you have this pullback where it's very orderly back into the 50-day moving average. Price gets nice and tight, and it gives us that tight range where we could set an alert. I'm setting an alert at $134.60 on Airbnb, just above today's high. And the stop that I would be considering if I were to take this would first be $127.90, just below today's low. That gives us so many different things. It gives us the all the moving averages, including the 50-day moving average, including the 200-day moving average if this thing breaks out. It also gives us the anchored VWAP from 2 earnings cycles ago. The breakout will be breaking out to the weekly high. So we've got multi-time frames going on here. We also have the anchored VWAP that it will be getting above from this recent peak. Plus, we also have the stochastics that are starting to turn positively here. All those things are good to see. Only about 5% risk on this one. And as far as Airbnb goes, the group rank on Airbnb is 24. Slight drop from last week. Last week it was 13, now it's 24, but it's still very high. Very strong group rank for Airbnb. Here's Amazon. Now, Amazon is another interesting one. Maybe interesting is the catchword of the day. The way that I'm seeing this is I'm seeing it as inverted head and shoulders. Here's the left shoulder. Here's the head. Here's the right shoulder. Here's another shoulder. VCP action within it where it's getting progressively tighter with the head, this shoulder, that shoulder. And the thing that I like about this right shoulder is how tight it's getting, how controlled the action is, and the relative strength line starting to turn up here, right along with the price action. And the distance between the entry, I'm looking at an entry of, or an alert, I should say, of $218.60 with a stop down at 206.90. That gives us 5% risk. The thing that Amazon actually reminds me a bit of right now, it almost looks like what we had in Meta not too long ago, where price had its run up, started to get nice and tight, and then started to run up right here. Amazon at this point, mega cap name, obviously, a little bit of a slower mover, but if that's your thing, this setup doesn't look bad at all. And finally, AGX. Now, AGX is setting up it's in a pullback. It's arguably a high tight flag. I think that we're kind of splitting hairs here if we want to be a stickler for the 100% run up. From the uh, over the last 8 weeks, from this point to the top of the poll, it's a 96% move. That I don't think that that's big of a deal. But if you're a stickler, that I understand that too. Either way, though, the way that this flag part has formed, flag pullback, call it what you will, it's come back towards the 50-day moving average, towards the 10-week line, if we're looking at the 10-week, bounces, then tightens up right around the 21 period exponential moving average. You got that moving average coil that you know that I like at this point. And uh, with this setup, I'm eyeing an entry or an alert at around $218.10. That's where I'm setting my alert. I'm eyeing a stop at 206.90 to start things off. This is a stock that on average moves five almost 5.5% per day. So what does that mean? That means that on a breakout, if this trade works, I could potentially be up 1R on the first day, just based on an average move. That's something that I like. I like trades where I know if I'm right or wrong right away. And this is the kind of name that gives us that. Now, something else that I want to share with you about the stocks that have all been on the action list. Come back over to Deep View for this. So go over to the action list, and the new ones are on here too. I'm going to sort this by sector. And first, I'll clear the sorting, and then sort it by sector. What do you see? I'll tell you what I see. I see a handful of industries on here, a handful of sectors. It's not where it's uh, a lot of variety. It's good variety, but there's concentration. Communication services, consumer discretionary, right? There's consumer discretionary this week as well as last week. Then we have financials, we've got industrials, and we've got information technology. To me, that's a light bulb on where the spotlight on where money is flowing right now. The stocks that are setting up, how they're moving, and this is how they're moving. It's great to track industry groups. It's great to track overall themes. It's also great for us to track the stocks that are setting up, especially the best ones, and then to track what groups they're coming from and how they're moving, because that's the action, right? That's the action list. That's why we're tracking these things. So it helps to highlight where to focus. Okay, so let's now talk a little bit about the open trades. All right, so we still have 4 open trades. Pull trading view back up here. All of them are open. So start with Spotify. Spotify, fresh all-time high, Volume continues to climb. It's looking fantastic. I took a scale out the other day. I'm letting this one run. I still have 3/4 of the position left. My next planned scale out is at 850. That's at about a 26% gain on the position. If it gets there, then I'll automatically sell another quarter, or at least that's the plan. If danger signals show up, then I'll sell based on the danger signals. For right now, I still have my stop at break even 669.90. I I'm going to be raising it soon, probably after the over the weekend. I'll look to raise it once we've got the weekly low established. I think that this week's low, right at around 700, makes sense for a raised stop. But for right now, still giving it plenty of room to operate. Here's KD. KD, still above the pivot. It had an inside day today. If we take off the indicators for a second and just see how this is consolidating, it pushed into highs. It's finding some sellers that were, and we could tell when price pushes higher, closes low, that's selling pressure. The volume is telling me that selling pressure is drying up at least a little bit. So for right now, I'm going to keep my stop at the original level, $39.40. I want to be able to give it a little bit of grace to be able to pull back below the pivot if it needs to, and then hopefully see it rebound. We give ourselves multiple ways to exit positions. At this point, all about the danger signals that I look at and how to, hopefully, how to use them. If you need a refresher, just reach out to me. There's a blog post that I have on that. We've done numerous videos on it too. Giving stocks room to maneuver, not overthinking things, especially when we're in a strong market environment. That's how we let moves run. That's how Spotify is up 11% or so, or more. Let me see what Spotify is up. I think that it's up 13%, something like that. No, 15.5%. Look at that. In a green condition, let it work. When we're getting into choppiness, or if it's a red condition, that's where I'm keeping risk or keeping things a little bit on a tighter leash. I'm still monitoring things. It's just the flow of how we need to manage our positions overall. Here's cyber. Ticker CYBR. Now you notice this one, how very similar to KD. It popped out on the breakout, pulled back, then day two closes low in its range again, and now today it's finally closing well. That's why we need to give these stocks a little bit of grace. Here's something else that can be very helpful. Using multi-time frame analysis, particularly looking at the weekly charts. The weekly chart of cyber still right near its weekly high. For KD, right, just to go back to this one, still near its weekly high. You couldn't tell that there's any kind of problem on the daily chart, and that's why we need to look at both the daily and the weekly time frames and have multiple ways to manage positions. You've heard me say this 100 times probably too. Write out your trading business plan. Spend an afternoon, think through how you're going to manage trades. We've got plenty of tutorials and literature on how to do those things too. And again, anybody Anybody needs help on any of those things, please reach out. Don't be shy. That's why I'm here. That's why you're paying for this. Um, RBRK. This one pulled back to the 10-week line, rallied, and here's where we're at right now. Uh, at one point, price was weak in the morning. Then it shook out below the 21 EMA, and that's one of the reasons why it's so important to not choke off trades, especially when you're in a strong environment. Let them give them the room to be able to work. This rallied, closed the day near the top of its range, and now it's actually, if I didn't have this a position in this already, I might be looking to enter on a break above the current weekly high at $93.64. But since I do have a position, I'm not looking to add to it. Not here. I'd rather see this begin to break out, work, have larger gains, and then think about it. It's more of a risk management, trade management perspective for why I'm not looking to add to this yet. But those are the four positions that I've got on. So back to the original question that we were asking, right? So we've got 6 stocks that are on the action list right now. 4 stocks that are in the portfolio. 3 out of the 4 stocks are stocks that were added this week. So if you're trading similarly to me, or maybe you might have even more names on, and you're like, wow, there's so many names that are setting up. Well, what do I do? Do I just trade everything? How do you manage that? How do you not be that guy at the buffet and you fall over with your plate of food, and then you don't have anything to eat? You have to wait to get back on the buffet line and hope that what you want is still there. Here's what you do. Here's how I treat the market. I have those alerts all set. I take a look at what's moving in the pre-market. It helps to me to have an expectation of, okay, something is gapping up, or things are right around the pivot, or maybe things are down a little bit. I did that this morning, and I saw that, okay, nothing is gapping up like it was the day before. We'll see if anything triggers an alert. Nothing did. As alerts start to trigger, that's when I go and I start to see, well, what time of day is it triggering? Does it have volume? Is it triggering cleanly, meaning that it starts out within the range and then breaks out? Right. Well, let me see if let's show this chart right here. Right. Well, we could do this with RBRK. So you see how price. Let's treat this as the breakout. So you see how price now started out down here today, and then it pushed up, and then it rallied. To me, that's what I'm talking about as clean, getting above this level here cleanly, not gapping up, not like how, say, lift, right? So on lift, the original level that I was looking at was right down here, right at $15. Price gaps up, then it gets faded immediately, and then it starts to move sideways, and it gets kind of funky in there. That's not a clean breakout. That's the kind of breakout that I avoid. Give some time and revisit later on. Hopefully that helps to make the distinction a little bit. So um, that's part of the way that if there's a feast like there is now, that I start to make some level of discernment. The next thing is I'll buy in order of what is breaking out. So let's say all of them are starting to break out, and many of them are clean, or several of them are clean. Well, which one do I buy? Do I wait for this other one? If one is breaking out earlier and it's clean, then I'll buy that one. If I feel like I'm too heavy and something else breaks out, then I'm gonna wait. And it's really as simple as that. I don't pretend that I know where price is going to go. I'm not trying to predict anything. It's all about reward to risk, risk management, and uh, probabilities. I always want to find for myself high probability, high reward, low risk trades. And as they break out, I put them on and I wait for my winners to start to make profits. Then I take the profits from those and I recycle them into the rest. So that way my baseline capital stays the same. I'm not risking my initial capital. I'm risking the profits, and then I can begin to scale profits. And in a market environment like this, uh, begin to hopefully we'll see how this market plays out, but hopefully scale it fairly quickly. Anyhow, this was a very long market wrap, so I will end it here. Hopefully you found this helpful. If you have any questions about anything that was said, please let me know. And I will talk to you over the weekend. Yeah, Friday's here, right? So I'll talk to you over the weekend. I'll talk to you in the Insight Hour for those of you that are a part of our accelerator program. Until then, take care, much love, and as always, God bless.